If you consider yourself to be a smart person that wants to invest, you've probably faced the following challenge. You pick a company or an ETF that you like. Then you do a bit of research and you decide to invest in it. However, just before you do, something stops you. The feeling that you don't know enough, that you need more information. Well, my friend, you're not alone. And in this video, I will discuss why that happens and what you can do about it. You see, you have been taught since you were a child that you have to know everything, or else you won't pass the test and you will be a failure. And the better grade you get, the better person you are. However, this old style of thinking was created in a world where information was scarce, in a world where a person would literally have to go to the library and read a whole book just to find one fact. Well, we don't live in such a world anymore. And this is why this type of thinking is dangerous. Not only is information not scarce anymore, it is infinitely abundant, and that changes the game. But some people don't realize it and become victims of their own mind. They become victims because they adopt the school mentality created in an information scarce world and try to apply it to their daily life and investment decisions in a world with unlimited access to information. The result? They get overwhelmed. And how wouldn't they? Our brain was not evolved to have all the information at our fingertips 24/7. And the problem is, the smarter you are, the more likely it is to fall victim to this trap. When it comes to investing, the issue manifests itself in very smart people thinking that if they are going to invest responsibly, then they have to be aware of everything that happens with their investments. They imagine their school's best student that now works in Goldman Sachs and analyzes, for example, medical device companies. This person spends all their day reading reports about developments in the industry. They follow all the companies that manufacture these devices. They know everything about them. But the key here is that they are literally paid to do that. And only that. You are not. Here is where we have to introduce the concept of lifestyle investing. Lifestyle investing means investing your capital in order to support the type of life you want. If you don't get paid to manage other people's money, then by definition that means you are a lifestyle investor because you are doing it for yourself. You don't get a salary, you have to manage everything and at the same time try to live your life. That changes the game entirely. It means you can no longer have the detailed view that our hypothetical investment analyst from the previous example has, but still know enough to invest in these medical device companies, for example. This can lead to a situation where highly intelligent people get what's known as analysis paralysis. They don't know when to stop researching and start acting. They don't know when enough is enough and when they should pull the trigger. So what they do is they never act. They never invest and they keep their money in the bank, allowing inflation to rob them of the value of their savings. So the irony is that by trying to avoid small losses, they actually suffer the biggest loss of all. And by the way, let me tell you a secret. Not acting is an active decision to make a certain choice as well. For example, if you decide that you will not invest and keep your money in dollars or euros, you're actively making a choice to invest in dollars and euros. But you trick yourself into thinking that you are playing it safe because you are not doing anything. Everything we make in our life is a choice. Staying in bed all day is a choice as well, and it has its risks too. There is no escaping that fact. Once you accept that, then everything changes and you are on the right path towards finding the solution. It starts with understanding that every action has its risks and sometimes not taking any risk is the biggest risk of all. Then you have to realize that you will never have all the information you need in order to make a decision. You might have 50% or 80%, but you will never know everything. This false idea exists only in the artificial environment of the classroom, where you have a limited number of pages from a book that you need to memorize, and once you've done that, you cannot fail. However, the world outside of school and the world of investing don't work like that. The issue here is that both extremes are equally harmful. You don't want to be paralyzed and not do anything because, well, then you won't achieve anything. However, Jumping into everything unprepared and investing your capital without having a clue what you are doing is likely to result in devastating losses. So, you have to be responsible enough to do your homework and research the investments you want to put your money into, but wise enough to know when to stop consuming information. If it sounds tricky, well, it's because it is. This is one of the reasons I created the dividend method program, where I explain how to evaluate a company or an ETF step by step, which metrics to look at, what type of information you need, and where to find it. That way you won't wonder all the time what to check, what not to check, where to focus your attention, etc. The idea is that you need to strike the golden balance of the right amount of information, but not all information available. For example, let's say you want to invest in the consumer staples giant Procter & Gamble. You must do your research, know what metrics to check, have a general understanding of the company's past performance, future potential performance, position in the economy, and other things. However, you have to accept you will know enough, but not everything. The idea that you will know how many units of shampoo Procter & Gamble sold in Argentina in the last 3 months is stupid. You've done your initial research, you are following with the company, you're monitoring the right metrics regularly in certain times of the year, and that's it. Now you need to let the management do its work, because you probably have a job, a business, a family, and also 20 other companies in your portfolio. And you have to be fine with that. If you are not, you can never start. By the way, the fact that I mentioned Procter & Gamble doesn't mean you should invest in the stock, and it is not financial advice. However, if you do want to know which are my top 4 stocks and ETFs I invest in for the current economic environment we are in, click the link in the description and I will send them to your email address for free. The report you get will always be up to date regardless of when you are watching this video, because I am constantly updating it. In my previous example with Procter & Gamble, I was talking about a company operating across most of the world, which is worth hundreds of billions of dollars. Can you imagine the scale of the operation, all of the different departments, the tens of thousands of employees? It is naive to think you know everything about the business, and you have to accept that. If you don't, you will never be able to invest, because by definition, investing means deploying your capital and letting it work for you, not doing all the work yourself. I mean, I have had times when I was managing 14 people in a business that is my own, and even I did not know absolutely everything that was going on. Now imagine knowing everything about a billion-dollar company. You simply can't, and that's totally fine. Actually, it is the way it should be. But for a lot of people, this is hard to accept. And that is not only linked with high level of intelligence, but also with another character trait that gets in the way of successful investing. Before I tell you what it is, if you like the video so far, press the like button and subscribe to the channel by clicking the notification bell. That way, you will be notified about future videos whenever they come out. You see, I know people who are multi-millionaires. A lot of them have all of their wealth under their direct control in their own business or real estate that they personally manage, etc. To me, this is insane. Tens of millions of dollars in the bank or in the business, and the day they stop working 16 hours a day, everything falls apart. Now, I'm not saying that they should abandon what they're doing or put everything in the stock market, far from it. But what I'm saying is that they should maybe put some part of their wealth there. However, they can't. Why? Because of the second issue I will talk about: control. You probably know such people. They are smart, hardworking, great professionals or businessmen. However, they always need to control and know everything. This is not how you create passive income and not how you become free. After all, being a slave to yourself is still being a slave. If you want passive income, you have to let go of the need to control everything. That doesn't mean to blindly put your money somewhere and never take care of it. Not at all. It means accepting that you will not be fully responsible for the results of your investment. Other people will. Your job is to initially research the investment and then check if it is on track. I think you can agree that it's laughable to call the CEO of Coca-Cola and coach him on his wrong business strategy when it comes to marketing their next new beverage launch. You make your money in your active efforts, your job, your business. Then you invest for passive income. It is the only way to be financially free. After all, the essence of the word passive means that you are not doing the job yourself, and you shouldn't, because you only have 24 hours a day and hopefully a life to live and enjoy. Let me know in the comments if you have been in this situation where you are stuck overanalyzing and wanting to know every possible information about investments that you made or were about to make. How did that affect your investment journey and how did you overcome that? Before you go, make sure to check whatever the algorithm has recommended on your screen right now to continue your investment education. See you in the next video.